Hi guys, this is Sam Howard coming at you with another video, and today we're going to talk about Disney Plus. So, Variety and other news outlets have been reporting today that they have lost 2.4 million subscribers in their last quarter. Now, I will provide my own thoughts on this, but real quick, we'll go through the article. Now, as I mentioned, they lost 2.4 million subscribers, making it's their first decline since they first launched the service back in late 2019, although they say late 2020 here. It was actually late 2019. However, quarterly earnings did top Wall Street estimates thanks to its surge in revenue at Disney's theme parks, likely because of their recent price increases. Now, the results are Bob Iger's first back in the CEO role after Bob Chapek was fired back in November. And essentially, Iger's goal is to reassure investors that the company has a plan to kind of get back on track and make some money again. Now, they did post revenue of $23.51 billion for the quarter, and with earnings per share of 99 cents, which beat analyst estimates. Now, I'll kind of just go over. I'll kind of skip past this. Now, the drop in subscribers, which was bigger than analysts expected, were driven by a 3.8 million sequential decline at Disney Plus Hotstar, the version of the service offered in India and parts of Southeast Asia, to stand at 161.8 million at the end of 2022. Last year, Disney lost streaming rights to Indian Premier League cricket matches, which prompted it to lower growth targets for Disney Plus Hotstar in India. In the U.S. and Canada, Disney Plus gained about 200,000 subs to reach 46.6 million. Hulu gained 800,000 in the quarter to stand at 48 million, and ESPN Plus increased by 600,000 to 24.9 million. Disney's direct-to-consumer revenue for the quarter rose 13% to $5.3 billion, while its operating loss increased 78% to $1.05 billion. The higher operating loss, which was better than analysts' forecast of $1.22 billion for the DTC segment, was due to higher content and technology costs at Disney Plus, with higher average cost per hour of programming, which included an increased mix of originals, as well as higher content costs and lower ad revenue at Hulu. Financial performance at ESPN Plus improved thanks to higher retail pricing. The company continues to expect Disney Plus to hit profitability in fiscal year 2024. So, I think I'll probably leave it for now. Once again, this video is really about Disney Plus, not so much about the other divisions of the company. So, what's been going on with Disney Plus? Well, I feel like there's a few things involved. For one, we are in a recession. The costs of living have been going up significantly. So if you look at gas prices, they've been up and down like a roller coaster in 2022, but going into 2023, they've been on the rise again. Of course, food costs have skyrocketed. The costs of other utilities and other essentials have gone up significantly. So with that, and also with the pay, the kind of the average salary that people make, they're starting to look for ways to cut costs, and well, Disney Plus ended up in those crosshairs. But I feel like that may be a little bit less of an issue if they had better programming. I feel like a lot of the original programming on Disney Plus has been very subpar, with the exception of the Marvel Studios special presentations. They haven't really put out anything that would be worth watching. That would be worth that $7, actually I think it's $8 for the ad plan, or $10 for ad-free a month. Just the programming isn't there. But you also have to consider that during Disney Plus's early years, we had the COVID-19 pandemic, and a lot of people were at home, and they couldn't go out to movie theaters, they couldn't go to sporting events, they couldn't really do anything else. So what do? Well, they get a bunch of subscriptions to various services, and now with people now being able to go out and do things again, go to movies, go to concerts, just being able to go out and live life again, there's been less of a need for streaming services. So I what can Disney do to try to rectify their current situation? Well, I think they need to really take a critical look at their programming. And I would say they should reallocate their investment. I think they could probably take some small budget cuts, maybe spend less on Marvel shows, and maybe invest it more into some original projects. Maybe go for a more quality over quantity approach. Instead of maybe dropping dozens upon dozens of television shows that may be of lesser quality, maybe spend that money on maybe a handful of higher quality programming. Or maybe bring in some like indie filmmakers or indie creators in general. Maybe try out some new ideas, maybe release some shorts, and maybe let fans choose a favorite, and maybe if it wins, perhaps it could be turned into a series or a movie, perhaps. I feel like Disney Plus really needs to just to focus on their fans and make programming that they want to watch. And I feel like so far Disney has not done that. But those are just my thoughts. And I'd like to hear from you guys, so feel free to drop a comment below the video. And I hope to catch you guys again tomorrow. Take care.